Hi guys, we just ended our sharing session with the traders this morning. Alright, basically what we went through was I showed them some of our trading performance in terms of the signals generated in 2015, and we compiled an analytics out of it and to share with them certain ways of which we can then use all this analytics to improve the overall performance coming into 2016. All right, so I would like to record this sessions. All right, to really share with more people, those who really cannot make it today, and people who are not based in Singapore, to share with you certain techniques of how you can then use your trading journal, all right, your data, your statistics that you have gathered, how you can then do an analytics out of it to really improve your trading and moving forward. Alright, so in a moment, I'll pull out the PowerPoint slides and I'll go through with you further in depth into certain ways of which you can conduct this analytics on yourself. Alright, traders, alright, so this is the PowerPoint that we went through today. Alright, so the agenda is very simple. Basically, today what we want to go through is to share with you the signals performance on 2015. Alright, what we did was we categorized them and show you the statistics, right? Basically by month, how we perform each month, by currencies in terms of grouping similar currencies into groups and see how they perform individually within currencies themselves. Alright, as well as by portfolio, alright, be it major pairs in a portfolio and then major cross rates in a portfolio, etc. And of course, our signals are being generated using two broad methodologies, and so we also split them into methodologies and to share with you how we perform over the past year. All right, and of course, the most important thing is with all this information, how you then use them, all right, understand these statistics and to make full use out of it. All right, no point having data but yet you do not perform any analytics on it and even apply on all this information that you have moving forward. All right, so that's the second part of this video that I want to go through. All right, and for in terms of feedback, I would really appreciate, if you are the user of a signal, you are part of our client, or even certain videos that we've done, analysis that we've done. If you have feedback, all right, feel free to drop it under this comment, because we are constantly looking for improvement. All right, we are not willing to stay stagnant, and where we are always looking for room for improvement. All right, so do let us know how we can improve on our service to you as well. So let's jump into the first part, all right, really about sharing with you our signal performance back in 2015. All right, to share with you basically the performance overall, what we did for 2015 is we clock in a total of 69.21%. And this is over a period of 8 months. Alright, we started this service in May, and we basically clocked in the results up to December 2015. So in this period of 8 months, a total of 314 trades were taken, with 138 wins and 174 losses. So if you compile it, the win rate is simply just above 40%. And what will I bring you to this is that, once again, I would like to once again emphasize, all right, that your win rate doesn't have to be super high to actually make money out of the financial market, because there are other aspects in play, and one of the most important one is really about risk to reward ratio. Right, so you can see that with our signals, we are not even hitting 50% win rate, but yet we are able to generate positive returns out of it as well. Alright, so let's break it into by month performance. Alright, so we started in May. May came in about 2.58%. Alright, with a total of 33 trades taken and a win ratio of just below 40%. And June was pretty great. It was one of the highest months that we have clocked in. Alright, returning about 33% with 52 trades taken, and you can see that the win ratio is above 50%. Right, July was a dip. Alright, July we went back down to gaining just 1.43%. Alright, with the trades taken is 48 and the win ratio is very low, right? Simply at 33%. And August was once again another great month. We clocked in about 21% with 46 trades taken and a win ratio of 45. Alright, and the later part of the year, alright, September, we clock in just shy of 10% with 34 trades taken and win ratio once again above 50%. October was low, alright, we just clocked in 1.63% with 43 trades. November 6.5 return, alright, with 20 trades taken. So you can quickly see that the numbers of trades doesn't really signify in terms of the percentage return that you get for the month. Right, because there are definitely other factors in play. For example, your risk to reward, your win ratio, or right, your profit factor itself. And the only month that we suffer a drawdown or negative month, I would say, we ended negative is really on December, right, with a loss of 6.8%. All right, simply taking 34 trades with a win ratio of less than 40%. All right, so this is a breakdown based on our monthly basis. So if we break it into by currencies pairing, alright, currencies group, alright, basically we can see that euro dollar gave us a total of 17.96 return, alright, totaling a 62 trades as well as a win ratio of just above 40%. Alright, and shockingly, our United States, the US dollar group itself, gives us a huge negative return, alright, basically close to negative 60%. With a win ratio of just above 30, slightly above 30. Right, Great Britain pound, alright, gave us a return of about 20%. The Japanese yen gave us about 34%. And Australian dollar gave us 35%, New Zealand dollar gave us about 30%, Canadian dollar gave us about 21%, and Swiss franc gave us about 5.55%. Alright, so you can see in terms of a breakdown of currencies, different pairs produce different return, right? Some more, some less, some even in the negative territory. Alright, so I'll share with you a little bit more as to how we can then use all this information moving forward. Alright, so this segment is really about sharing with you some of the stats that we have compiled. And of course, if we break our performance in terms of portfolio, alright, so you can see the major pairs, alright, the 10 currency pairs under this portfolio are listed on the right. If you trade our signals based on the major pairs only, you should actually experience a negative return, alright, basically close to 50% negative, alright, with a win rate of just 33.9%. Alright, but if you take only our major cross rate, you should experience a huge gain, alright, basically close to 75% return, alright, with almost equivalent amount of trades, alright, 119. Alright, and the win rate is above 50%. And of course, you can see on the left hand side of these slides are all the currencies under this portfolio itself. Alright, and there are some currencies pairs that is not under the major pairs as well as not the major cross rates, and we term them under the portfolio called other pairs. Alright, basically they are the Euro, Aussie, Euro, Canadian, Euro, Kiwi, as well as the dollar, Sing. These four currencies itself, alright, produce over 20% return as well, and the trades in terms of number itself is 39 trades taken over the period of 8 months, alright, with a win rate of just below 50%. And of course, we have two other portfolios, right? The second last is the indices. Basically, indices we only track generate signals for these two, right? Basically, the German DAX 30 as well as the S&P 500. And you can see that this portfolio gave us a negative 9.62% over 13 trades with just 23% win rate. Alright, and the last portfolio that we have are really commodities, basically gold, silver, and oil. In terms of oil here is against the US dollar, so it's the WTI. Alright, and this commodities portfolio produced a return of 27% over 23 trades with a pretty high hit rate, alright, over 60%. So having gone through with you the portfolio, alright, performance by portfolio, the last one I want to go through with you is really by methodology itself. So those who are familiar, what are some of the methodologies that we use over here is mainly two broad categories, alright, via structure setups as well as pattern setups, alright. I wouldn't go in depth into how these signals are generated, right? That's not the purpose of this video. But to basically give you an idea of what structure setup and pattern setup is structure setup basically is a trend following plus a counter trend methodology, alright? So it trades either during a trending environment or it trades when there is a valid counter trend setup. As for pattern setup, it's simple, alright? For those who are familiar with harmonic patterns, those are under pattern setup. So you can clearly see that in 2015, most of our returns are actually generated via pattern setup. Right, and if you look into that in terms of numbers of trade generated from each of the setups, it's about the same. All right, 144 on structure and 168 from pattern setup. But if you compare the win rate, all right, harmonic patterns, the pattern setup itself gave you about 47% return win rate, all right, the win ratio, but structure setup just gave you a 40% ratio. All right, with that, I would like to also even break this down further. All right, so in terms of structure, we do have two strategies. All right, basically the 1, 2, 3, 4 strategy and the 2, 6, 1, 8. So once again, I won't go in depth as to what this strategy means and how they are generated, but simply 1, 2, 3, 4 is a trend continuation, basically following the trend setup. All right, and 2, 6, 1, 8 is really just a counter trend setup. Right, and you see that there's an unknown component. Basically, it's because during May and June, early of June, all right, basically entire month of May and early June, we didn't have sufficient information. We didn't record sufficient information to actually tell us in terms of what trades it is. So moving into when we do this analysis itself, we do not have sufficient information to know whether this setup is under the 1, 2, 3, 4 or the 2, 6, 1, 8. So that's a mistake that we did, all right, and definitely a lessons for you as well. So you need to ensure that in your journal, all right, your trading journal, sufficient information and important data points are being kept so that in the future when you want to do analysis, that's where you can do it. Alright, so simply you look at this this table as well as the information provided, you can clearly see that 1, 2, 3, 4 strategy produced a positive return, whereas the 2, 6, 1, 8, the counter trend strategy produced a negative 3%. Alright, for now we will just simply not talk about the unknown because there's basically nothing that I can talk about because even myself I can't pull out information as to whether it falls under the 1, 2, 3, 4 or 2, 6, 1, 8. Alright, on the other hand, in terms of pattern setup, right, we break it down into bat pattern, Gartley pattern, cipher pattern, butterfly pattern, and then of course once again we have a small component of unknown because of May and June period itself. Alright, a quick glance, you can see that bat and Gartley pattern produce over 20% return, with cipher just shy of 3 to 4%, right, and butterfly produce a 15% return. Alright, I want to pull you to the win ratio as well. You can see the bat win ratio is less than 50. Alright, but it produced such high return as compared to Gartley, cipher, and butterfly. Right, mainly once again I would like to emphasize is because of risk to reward ratio. Alright, bat pattern offer a higher risk to reward ratio compared to Gartley and cipher. Alright, so you can see how this breakdown it is, and I want to show you moving forward, alright, having all this information, all this data, how are you going to use them? Right, so that is more crucial than simply just generating data because anyone can generate the data, but in terms of analysis, how are you going to do it? Alright, so simple, alright, let's go through again the categories, alright. Simply by currencies, in terms of currencies, grouping the signals into currencies, you can see that the dollar pair, right, the dollar group itself is a negative. So moving forward in 2016, alright, if you're one of our clients in terms of using this signal, I would like to first put a disclaimer that we will continue, alright, to generate all signals. Alright, meaning we won't filter the signals simply because dollar is negative last 8 months. We don't generate the dollar signal. Alright, no, we will generate, alright, I repeat again, we will continue to generate our signals as usual. That means we will go through all 28 currency pairs, 2 indices, as well as 3 commodities and send you any valid setup, alright. But for you, alright, you as a trader, you as a client, you can then make the decision, alright, moving forward into 2016. Do you want to take all this signal? Alright, the reason for us sending it out to you is because we understand that different traders and different clients will have very different style of trading and different preference. That's one, alright. The other reason as to why we are still sending out to you is really to track. Alright, because we believe that 8 months of data is definitely not the perfect period. In terms of 8 months is relatively a short amount of time to actually gather information. Right, and hopefully in 2016 we can gather more information and even make a more informed decision and conclusion over the years. Alright, so you can decide not to trade the dollar, alright, and in terms of franc, because the return as compared to other currencies are less, you can even consider taking it out, right? That means any signals that comes with Swiss franc, you can decide not to take it. And of course, if we break it down into a portfolio or a major pairs portfolio, not to take it, basically any pairs that's coming with US dollar, you can see most of them are under this category, under this portfolio, you can decide not to take it. Alright, as for major cross rate, yes, take it because it produces overall a huge return. Alright, and for other pairs, again, we will recommend you to also take this portfolio because of the positive return over the 8 months in the past. Alright, and of course for indices, alright, we would strongly encourage you to perhaps stay away from it. Either is because our methodologies doesn't perform well in terms of analyzing the indices, or perhaps the market conditions doesn't favor us back in 2015. That we do not know, alright, but it's true statistics that it provides you with information to make a decision and a trade call for yourself, whether you want to continue trading all this. Alright, and commodities itself, alright, once again, we'll encourage or even say that, yeah, go ahead, continue trading the commodity signals. Alright, in terms of methodology, alright, structure and patterns both give you a positive return, so there's no reason as to omitting any. But breakdown into more detail is that you can see the 1, 2, 3, 4 overall is positive, but 2, 6, 1, 8 in terms of the counter trend strategy is not giving a positive return. Alright, so moving into 2016, alright, you can decide that perhaps any signals that are counter trend, you do not want to take it. Alright, as for pattern itself, perhaps cipher pattern, alright, simply just giving you a slight positive return, you might decide not to take cipher pattern, alright, but focus more of your capital or effort in terms of bat pattern, gully pattern, or even butterfly pattern. Alright, and having said that, we also rank our top 10 best performing pair. Alright, and this is the list itself. So the first, of course, the top of it is Aussie Kiwi. Alright, having generated 10 trades past last year, returning a 21.91%. Alright, and the last in the list is Canadian Yen. Alright, giving you a 6.87% return. And of course, with that, we also have the top 10 worst performing pair. Alright, on top of the list is Euro Dollar. Alright, if you trade Euro Dollar only, you would have suffered a negative 17.52%. Right, and the last in the list is Dollar Sing. Right, giving you a negative 2.7%. So these are some information that I hope, providing it to you, and through the techniques of how we put this information together, all right, in terms of part of our analytics, you actually get certain knowledge or even techniques as to how you can perform all this on your own trading performance, own trading journal as well, and moving forward, how you can use all this information to improve and even make your performance better in 2016. Alright, and of course the last part, I would really love for you guys to drop your comments, alright, feedback to me, for those who are under are subscribing to our service, alright, our clients. We really value your feedback into whether how we can improve this service to you. And for those who are following us, alright, on YouTube or even in our Facebook pages and everything else, do let us know your feedback in terms of our general market analysis, our video analysis that we generated out. What is something that we can do better, alright, to meet your needs and something that you are looking for. Alright, so please do that, and of course don't forget to like and subscribe to our channel if you haven't done so. And hopefully this video provided some value for you. Alright, and if it does, do share this video with other traders out there as well. So with that, I'll talk to you soon, and if I have the time over this weekend, I'll also generate a video for next week market analysis as well. Right, so till then, I'll see you and have a great weekend.